In this video, I answer a member's question where he wanted me to look at the chart of BITX, give him a good entry point, and of course, that's what I did. I'm trading BITX. I have over 2,400 shares, and I have a covered call on those shares expiring this Friday. Knocking it down. We sell premium, writing covered calls and selling cash secure puts. We generate all the money you see here. See that green line right there? That's the first 2 weeks of July. Look, if you're not getting off good trade and you're not putting on steady week over week cash secure puts or covered calls that's generating you that kind of profit, you really need to watch this video because that's what I show the members. We talk about great entry points. I'm going to show you in this video how I break down the BITX trade. And if you noticed, you probably didn't, but we just put on a BITX trade for next Friday, July 18th. We did a cash secure put. I sent that to the members. Hey, look, at the end of this video, you're going to get a chance to get a 1 free month offer to my membership. If you like any of this and you find yourself hesitant, you don't know what kind of trades to put on, well, all you have to do is follow the leader. I do this in retirement. This is how I generate my money I live on in retirement. All of this money goes to feed my dividend trees so we can live off of passive income. Knocking it down. Stick around. I know you're going to like this one. Hey, welcome back, everyone. Let's do another member's question where he wants me to take a look at BITX. Now, BITX is one of my favorite trades, largely because we're using Bitcoin. We're not using a company, although I do use MSTX, which is the 2x leverage ETF to MSTR. MicroStrategies. We got involved in that last year. I would love to get out of that trade. I will eventually, but I love BITX. 2x leverage ETF to Bitcoin. It actually has more IV than most any stock out there, except some of the 3x leverage ETFs to the indexes that we use. BITX is one that I love, and I'm going to stay in this trade. Now, I actually have 2,400 shares of BITX, and I have a covered call expiring this coming Friday for the 57 strike. I've showed you many times where I got involved late last year. I've made about $47,000 using BITX while I own these shares. And it's absolutely incredible that we can sell premium even though the stock has never gotten above my 57 strike. Why? Because Bitcoin hasn't gotten over 111,000. That's where BITX at 60 gets you Bitcoin at an all-time high. So looking at the chart of BITX, you know, one of the things that I love to do when I look at the charts, I want to bring up the Keltner channel. And the reason for that is because the Keltner channel is a stock's trading range. It's not any expected move up or down, this, that, or the other. It's all about the trading range. And because we sell time, we can look at this almost from a macro standpoint, not necessarily a micro, where we look at days or minutes or seconds. We can actually look at this by pulling back a couple months. And that's what we want to do. And we want to use the Keltner channel to help us in terms of where we think it might go. One of the things I'm going to tell you is anytime you invest in any stock or ETF, try to get involved when it's trading lowest in its range so you have a more favorable chance that the position will go higher. So now looking at BITX, what would we do? Well, I'm actually thinking about getting involved in BITX again. Even though I have a position right now with 145,000, I have about 50 grand on the side. I want a new position. Well, I'm looking at the 51 strike. Now you're saying to yourself, why did you pick the 51 strike? This is where chart reading really helps us find great favorable entries. Look, we're not going to pick the bottom or the top. There's just a couple guidelines we absolutely want to use. When a stock is trading outside of the Keltner channel top, we have to avoid it until it comes back. You could see it gets involved here at 47. If you got in at 47 and you ran it to 60, then hey, I tip my hat to you. Most of the time, we don't recognize these things till it gets to the end of its run, and then we buy it and we're left holding a bag. Wall Street literally hands you the bag and they get out and you're stuck at 60. Now, I like to see a stock come back into the normal trading of a Keltner channel. What we're really hoping is that it touches some sort of support that might be relative to the last support. And when it pulls back, whether that's the great entry point or not, at least we didn't get in at 60. See, now we're getting in at 51, and that feels much better, right? Sometimes you have to pan back and say, what is the trading range, and where might there be support if this thing collapses? First thing I'm going to look at is the Keltner channel. Is it inside the Keltner channels? Now, if it is, checkbox number 1. If it's trading in the top of the range or bottom of the range, it doesn't matter. We're going to use a different strategy for each. So if it's trading at the top of the Keltner channel, but not outside, we're going to go ahead and buy shares and write a deep in the money covered call. So if we get the pullback, which I suspect will happen, at least you have downside protection and you can work from there. If it's trading at the bottom of its range, you can get involved at the bottom with a favorable chance it goes higher. Looking at this chart, I'll tell you what, where is the bottom? You're saying to yourself, well, it's easy. It's right there, John. It's around 47. Now, 47 would be pretty sweet. I want you to see that when it broke resistance, meaning when it was trading months ago, it had to break resistance to go higher. And sure enough, if you go all the way back to May, look where it breaks out from, 47. It falls from 60 all the way down to 47. That's not a coincidence. This is where Wall Street will plant their flags. We get it breaking through resistance. It continues to go higher. And when it comes back, it's going to rally again. And when it pulls back, it finds itself at 47. Again, 47 goes back to when it broke resistance and it moved higher. So 47 is a good place to plant a flag. But with it trading at 55, can you get any premium for that? You can't. So let's dial it in a little bit closer, knowing that 47 is the bottom. So with 47 being the bottom, and if this thing were to fall to 47, then we have to have a cost basis that we're willing to work with. And right now, 55 is not good. If you bought the shares at 55, wrote an out of the money strike, didn't have your shares taken, and it falls to 47, your cost basis is 55. It's hard to rate a covered call when you're trading at 47, trying to get out at 55. So what I like to do, when it's trading at 55, we try to find some level of support that isn't 47 and something that's a little more reasonable. You can see with these 3 candlesticks right here, we could find a home right here, and that would be 51. The bottom of the last fall before it rallies. The last 2 sell-offs, it's in and around that 51 to 50 strike. So we can work with that. And if I'm assigned the shares at 51, then at 51, I own the shares at 51. If it fell to 47 in what would be a couple day trade and it could bounce back, well, I can get off a decent 30-day trade at the 51 strike. Remember, it's all about 2 trades. We do our first trade, and what we hope is that it doesn't come down to 51 and we're not assigned the shares. We keep that premium and we move on. But if it falls to 51, hey, that's great. Now we're going to be assigned the shares, and if it's trading at 51, we will write an at-the-money covered call and get out at our cost basis. Scenario number 3 is that it falls to support, and that's the sucky one. It gets down to 47, and quite frankly, it probably popped to 48. This was intraday, 48. If you dial up a 51 30-day trade when it's trading at 48, you could still get over 6% on a 30-day covered call, still beating the stock market hands down. So this is how we look at our charts. We absolutely do not want to trade when it's outside the range, outside the top of the Keltner channel. Another thing you want to look at, when it was trading at 60 right here, RSI 87. RSI 70 to 80 is overcooked, overbought. They're going to sell it. They're just going to sell it. It gets to 87 before they sell it off. So all that pushing got all those people to get into it, and then Wall Street conveniently handed them the bag of what would then be some 11 points as it falls back to 49. So we do not want to be trading outside the top of the range. Now, we dial in a little closer. We want to find out where support is, and then not only near term, just move the screen back a little bit, see the last time it poked through. That is a good line because that's resistance. And you know that if a stock stays above resistance for 3 days, that potentially could be, in a bull market, new support. So in this case, I am looking at the 48 strike as being support. It's trading at 55. I love the near-term support of 51. I would plant my flag at 51. And I've already dialed that trade up. You can do a 2-week cash secure put, 51 strike, you'd get 80 cents for that. I'll tell you what, that's a decent premium for a 2-week trade. And look at that downside protection you get. And if you're assigned the shares, you can absolutely write an at-the-money covered call. And if that were the case, you're assigned the shares at 51, you write an at-the-money 51 for 2 weeks, you get approximately $2.50 for that. That's how we set these trades up. We set up trade number 1 based on things that I talked about. Then we ultimately have trade number 2. And if it's a worst case scenario, well, we've highlighted where we believe absolute support would be. And then, of course, we're going to write an out-of-the-money 30-day at my cost basis covered call. Hey, look, I love BITX right now. I think Bitcoin is consolidating. I believe Bitcoin moves towards all-time highs within the next 2 weeks. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.